Fred, as indicated last month, the Market Leaders Forum, which took place earlier today, has decided to launch a 31 billion shilling infrastructure bond. Let us in on the highlights of this meeting and the key points on the bond that will be on offer.
Interesting to note, Terryanne, you've just mentioned how much the government needs to borrow this financial year. It's important to note that last year, for example, the government was able to raise 124 billion without breaking a sweat. In the last financial year. This year they're looking for 126 billion. It is our feeling that this will be easily met this financial year. Now, in today's Market Leaders Forum, what we gleaned from the meeting was that perhaps what was in consideration was 25-year or the infrastructure bond. And since last month, the 25-year was offered and it was oversubscribed. This month they preferred to go with the infrastructure for 31 billion shillings, interest with a coupon of 7.5%.
Now, in the last financial year, the government also put out a bond of 33 billion shillings. That was the infrastructure bond.
Divided by 2.
Yes, it was oversubscribed.
Yes.
Do you expect
absolutely.
the same for this particular one, or how do you see the market responding to it?
It is interesting because currently, Terryanne, we're facing an increase in money supply in the economy, and that's why we have been seeing a significant interest rate decline. And because of this, of course, it's not very healthy when interest rates are too low, such that it becomes very hard for people to make correct investment decisions. Perhaps what was in the minds of the issuers of these bonds is stabilization of interest rates. When the interest rates are too low, volatility sets in, and that's not good for the economy. So 31 billion appeared a good option to launch at this particular time, perhaps to stabilize the money supply in the economy and also stabilize the interest rates.
Now, some analysts agree that the interest rates are likely to go down, especially within the next 2 months to come. Do you share in that opinion, or how do you see the interest rates reacting, seeing as we have other bonds that are coming into the market, such as the second tranche of the Safaricom 12 billion bond?
Interest rates have already come down. They have been coming down really at a much faster rate than we have seen in the past. And my view is they are likely to stabilize now, going forward. Yeah.
Now, in what areas do you see the government spending this money in the infrastructure bond? We've seen the government take a very central focus on the roads, on geothermal projects and some other energy projects that they are taking on. Do you have any idea where this money will be going?
My guess is they will still continue in the infrastructure, that is the road network, communication, food security in terms of water irrigation, maybe food storages and energy sector. I still foresee that government plowing this money back into the same sectors.
Going forward, how do you see this particular 31B infrastructure bond impacting the bond markets? We've seen the corporates very quiet. We're only seeing Safaricom coming in between September and November. General outlook, how do you see this impacting the market?
This is a new development. 31 billion of infrastructure at a very good rate of 7.5% is the new development. The market is still yet to digest the impact of this infrastructure bond. So it will be important to see how the market will play out.